So, good morning. It's Monday, March 30th, 2015. Welcome to today's live Forex trading strategy session. My name is Wayne McDonald. I'm Chief FX Market Strategist for TradersWay.com. Thank you for being a client. If you're watching this video on YouTube, give us a thumbs up. Let us know that you care. If you want to attend live, like everybody else here, just open up a demo account at TradersWay.com. It's a Monday. Usually what I do is I go through the calendar and COT report and plan out the week. And for whatever reason, that ain't working today. So we'll do technical analysis, which ain't a bad thing to do anyways. Now, over the weekend, there has been some interesting news. China is in panic mode. And it's interesting. So, anyways, two different people in the government had said, that there's room for doing more things to provide growth to the Chinese economy, and so maybe they'll do some more stimulus. Maybe they'll cut interest rates more, so on and so forth. But the Chinese currency is pegged to the dollar, and the dollar is strong. Right? So that is interesting. So they have to fight that because the dollar's been strong, it's likely to stay strong, so on and so forth. So good luck with that, China. So we'll see what they're going to do. More stimulus, I would say, would be good for Australia. But looking at other things, let's say at commodities, the trend is down, likely to stay down. Commodities could be down this year and next year. So Australia fight that headwind. So, wow, 7:30 in the morning here, and there's lightning storms outside. We don't lose power. I have multiple internet connections, but I don't have a backup generator. So we'll see what happens. So, anyways, let's go through some commodities. We'll go through the various currencies and stuff. And I want to go through the yen as well. There was something very interesting going on with the Japanese yen over the weekend as well. We learned the Japanese industrial production is pathetic. Oh, whoa. So the BOJ is going to need to do something to fix that and fix it fast. So let's do our technicals today, huh? Remember, trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, does not predict future results. So always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So commodities. I shorted last week, and I believe these binaries end on Thursday. Do you guys recall doing this? We did binary options, right? Medium-term swing type trades. And so far in the profit, very nice, very nice. So one of the things we had discussed is, why use a binary. One of the wonderful things about a binary is you don't necessarily have to manage the trade. There's no well, put it this way: if I had shorted the cash market for this, I would have had to suffer a $20 loss, which might have been too much of a loss for me to suffer through and stay confident. But using a binary, I could be, 1 penny off or $200 off. It wouldn't make a difference to me. I don't care. And that's kind of nice. Set it and forget it. Everything is preset. I either make a certain amount of money or lose a certain amount of money. So right now I'm profitable. That's that. Good enough for me. But like I said, the binary doesn't expire. Where is this? I double clicked by accident. That's why there's two up there. When do you expire? Does it tell me time? Guess it doesn't tell me here. But I believe it's the 2nd. Cool. Oh, and there's that pound yen trade or pound dollar trade. 353 pips profit. Bada bing, bada boom. So it's moving along as well. So let's say looking at gold here, be interesting if this is a resumption of trend. And obviously that's what I'm trying to do, right? Our old sell zone is this red area. That's why I sold there. I mean, goes without saying. But what else do you see here that is interesting that might be an opportunity to build confidence in your technical analysis? Do you see anything? No, it's a pretty open-ended, vague question. But what I'm getting at is even if you're not in a particular trade, you should recognize the analysis that you tend to use, and in your mind confirm the patterns that you see as having worked, so that if you're in this trade, that's fine. But what about the next trade, and 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 the next trade, right? To pull the trigger, you need to have confidence in your analysis. So what I'm looking at here is pivot points. Okay, the top of this week was a pivot profit zone. I don't think that's a coincidence. So I look at that and say, okay, cool. Pivots are working. Market participants, other than myself, are actually using pivot points. Cool. Okay. So some people are going to have this lined up here. Okay. There's no doubt about it. That's why you got to sell high or buy low, right? So selling now would be foolish. But somebody's going to try to do this, in my humble opinion. Okay? And that would be what would create a loss for me, right? But I believe that somebody's going to want to do that. Is it going to be at the 382? Is it the 50%? Is it going to be at the 618? All of that stuff, I don't know. But they're setting up. We're at a nice fib retracement for a sort of a, I don't know, 1, 2, 3 type scenario. I don't want that to happen, but I'm expecting it to happen. Okay, because if I was a bull, that's what I would do. That's a very important thing to do as a trader, because then you know your risk areas, right? And of course, this is what I'm doing. I'm basically short. Here's where I'm short. I'm short just about at the 382 Fibonacci retracement for the larger swing. Okay? Okay? And so the binary was an 8-day binary. The reason I did 8 days is the 7-day binary landed on April 1st, and I wasn't sure with the new month if there was going to be, unique volatility for that, because it's not only April 1st is April Fool's Day, right? And it's the first day of the month, but it's also the first day of a quarter. You see what I mean? So it was just like, I don't know. There might have been something there, and I didn't necessarily want that involved. So I threw down a trade that, I think we went from a Wednesday to a Thursday. So we've been in the trade now, let's say Wednesday, Thursday, Friday, Monday. So this is our fourth trading day. And cool, that one's profitable. Okay, coolio, huh? But I would expect, and as you can see, because I shorted, let me go back to that. Because I shorted, so obviously I expect this to work its way down. Now, do I expect it to work its way through this? No, I can't say. Well, if technical analysis was enough, if the world worked on only technical analysis, then we would do this. A 3A2 predicts a 1618. Okay? So the target here would be 1050. Okay? According to technical analysis. Okay? Not an opinion, just that's all technical analysis says. I've been around. I've been around this big rock. Met a lot of people. There's a lot going on in gold besides technical analysis. So there's a lot of people that would buy this at 1100 only because it's 1100. They'd buy it at 1050 just because it's 1050. They certainly would buy it at 1000 only because it's 1000, not because of technical analysis and fundamentals. And no, there's a lot of people that hold gold to defend certain prices, and it gets complicated, my friend. Why does it get complicated? Because people are involved. But, like I said, when we were down here and expecting a retracement, why would I expect a retracement? Oh, well, we were at support and oversold. So it retraced, and I said if it got to 1200, I'd sell it at 1200. So I did. This should come down and maybe even further down. Okay? See, I think dollar is going to be strong for a long time. Okay? So if this was enough, if this was if this was easy, gold would drop to $750. Okay? If this was easy. If the world, world without people, right? Can you see like bunny rabbits trading currencies, right? Because no people. If it was easy, this would just drop to 750. There's lots of people involved. There's lots of people that have positions, are holding gold and all this kind of stuff. So it's going to be a fight all the way down. But if it were easy, I think gold would drop to 750. But I have my doubts on that right now. But that's where I would, again, if I overlap the dollar. See, what have I been saying about the dollar? That it's going to fall to 80, which is very interesting because versus euro, right? The euro USD is going to drop to 80, which is amazing because the absolute low is 82. Okay, I think that could definitely happen. So if euro USD drops to 80, what's gold going to be? Okay, so I think some of the normal correlations are going to break down in some of the markets where if euro USD does drop to 80, gold will drop, but it's not going to drop as much. Other people are going to get involved. Just the idea of buying low is enough. Okay, just people they want to own gold. They always are, even if it's an emotional decision. They're going to make it. They're going to want to buy it just because it's 1,000. Okay. A euro, for example, they're not going to buy it just because it's cheap. Gold, yes, they'll buy it just because it's cheap. Are they going to buy lead just because it's cheap? Gold is unique, isn't it? So I think it'll be a fight, but we can make money on the way down, right? I mean, look at it. It's like a pretty good trade to me. Okay. So that's that. How about oil? Yeah, very strange that it even got to 52. Very, very, very strange. So at least we're back below 50. I'm a bear on this as well. Okay. But this went much, 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 much higher than I thought. So, how do you play this? I'm gonna have to like look at it like this. I don't think it's a coincidence that it topped out right there. So there's stuff going on. Back down to the low end of this, sure, but you can't sell it now. And the reason you can't sell it now is somebody's going to buy it here, right? Okay, you see? Let's just call it 50% retracement of the rise. And, I have this, it's almost an Andrew's pitchfork, but I got this thing over here. We're back into this channel, 50% retracement, this big move. One message I've been trying to share with you for a very long time is you buy low or sell high, but you don't do anything in the middle. Okay. So you could buy it, but I don't want to. So just pick a team, right? Pick a side. I would sell this if I were me, but I can't sell it here. So what's the next one? Sell it up high. Wait for this oscillator to become more overbought, so on and so forth. Okay. There's talk about allowing Iran to sell oil in the open market. More oil on the market. Yeah, I mean, we've been talking about this going down to 25. Like, wow, huh? All right. Stock market, I want this to go up. And looks like basically, let's carry this forward. Okay. Yeah. Let me draw this. Okay. Yeah. So, I want this to go up. I think there's been some profit taking going into the end of the quarter. And it's time to continue mission. And this thing should go up. Okay. Am I going to get in the way of that trend? No. Okay, what about if the world only ran on technical analysis? We can go through that idea. Okay. Then this does seem very topish. Okay. So this area here does not look like it's trending up. Okay, and then it makes a huge high. And then, okay, then this should be a 1, 2, 3, even higher, right? lower high, right? Almost, you can almost call it a higher low. So, you know, this is not good, whatever's going on here. But like gold, this isn't just, it's, it's not just colors or numbers on the screen. Okay, the way the world works is if this goes up, almost everybody makes money. Okay? If this market goes up, almost everybody's going to make money. If it comes down, some people might make money, but most will not. So the way I look at it is that there is a prevailing trend, a wind, a prevailing wind, and the vast majority of the time, it's going to propel this market up, no matter what happens. I'm going to be mostly a bull on the stock market. Okay. Now, a lot of people get, upset. They get like, well, the Fed's going to raise interest rates and the stock market's going to crash. All right, well, prove it. Lots of people get frightened about nothing. Prove it. Show me. Oh, they read in a book somewhere. They read in a book somewhere, interest rates go up, stock market falls. Good. Show me the chart. And if you show me the chart of, like, let's say when the Fed raised interest rates last time, right? What was the stock market doing? Think about it. Were you guys around before 2008? Anybody watch the stock market in 2004, 2005, 2006, 2007? What direction did the market go? The stock market. 2004, 2005, 2006, 2007. Was it going up the whole time or down the whole time? Yeah, it was going up. Up, up, up. And what was the Fed doing? They started raising interest rates, in 2002-ish, right? They raised interest rates and they raised interest rates again and again and again and again and again and again and again. The whole time they were raising interest rates. Right? So whatever. Just be careful what you listen to. And if you think, what I'm saying is nonsense, good. Do your own research, make your own opinion. But, there's going to be lots of chickens with it all. And it goes up because businesses can borrow money for cheap, which means they can earn a profit as long as the economy's not collapsing. Well, the economy's not collapsing. But look, the economy in the United States is growing quite well. It's not amazing, but it's growing steadily. It's fine. It's good. Corporations are making money. One reason they can make money is it's affordable. But if the Fed jacked up interest rates all the way to 2%, I mean, come on. Just look at a yield curve, right? Spend, 12 minutes doing research on what happens on yield curve analysis over the history of stock market growth. I mean, we're good. This is going to go up. So when you have these retracements, look for opportunities to buy. That's how I look at it. You can do whatever you want. Okay. Now, if it does break down like this, then take a break. Okay. But I think a lot of this is just quarter end. And once we roll into April, let's say Mutual Fund Monday, one Monday from now, generally speaking, this market's going to go up. Okay, so maybe you just want to measure it like this for now. Okay, you can wedge it like that, and even if it comes down and does this, I'm okay, right? So I'll do it like that. There's kind of like a double wedge going on here. Don't worry about it. But I would like to look for opportunities to buy. And yes, that also means the dollar can get strong if foreigners are buying the U.S. stock market. Okay, looks like the German stock market's doing well. Yeah. Same sort of thing, right? When it drops, look for opportunities to buy. What's the trend here? The economy's doing good? No. 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 See, it's not the same situation as what we have in the United States. Why is this one going up? Because the ECB is doing quantitative easing, which by design increases asset prices. The German stock market is going up because the ECB is pumping money, billions of euro, into the European economy. That's why it goes up. Okay. So keep on that. All right. So yen. Yeah, let's go over to the yen. So this is interesting. I was so happy for Japan. I was so proud of Japan for hiring a prime minister that was willing to make really big changes to the Japanese economy, and to get a central banker that that also wants to do the same thing, and that they could come together and create policy, fiscal and monetary policy, to finally drag Japan out of its 25-year recession. And they got the upper and lower parliaments of their government on board, so that the whole country is behind this one rally cry, right? To save Japan. Finally. Right? And then they decide to raise taxes. I just don't get it. I don't get it. I just don't get it. I can't fathom what's going on there. But don't worry, I've been disappointed by our U.S. government. But that was another blunder out of Japan of epic proportions. Epic fail for sure. Unbelievable. Just I was so proud of the Japanese for doing whatever it took to be successful, and then they decided to do whatever it takes to screw it all up. Amazing. So since they've raised taxes, which was what a year ago now, I guess, right? It's just not been good, because here they are doing things to expand the economy, and then they immediately on top of that do something to contract the economy. Well, guess what? They just rained on their own parade. Right? I don't get it. So, all right. So we have all this stuff going on in Japan to save the economy. They've been struggling ever since that tax hike. At least they didn't do the second tax hike. But Japanese industrial production, do you think this is important to the Japanese economy? Seems to me that Japan is a manufacturing economy, right? So you would think Japanese industrial production, this is like a measurement of Japanese factories. You think it'd be pretty good, right? Especially with energy prices at like almost a generational low, right? So why is it -3? Right? YJ, we'll have to get you to do a special report on what Japan is going to do next. But they're going to need to do something, right? Yeah, well, generally you should be doing this for yourself, right, YJ? YJ is in Japan, by the way. As a currency trader, these are the questions you need to be asking, right? So how are we going to make money on this? Well, they're going to need to do something. So you'll see, like, we'll look at USD yen here. Let me just pull that one up specifically. Okay, you can see it's spiked up here. Now, first of all, build the confidence, pivot towards, right? There's the projected low for the week. It held. Here's the projected high for the week. Okay, we're on our way to 121. Obviously, 120 is going to be an issue. But anyways, they're going to need to do something. So bad news is good news. Well, it depends on how you look at it. Bad news right now should weaken the Japanese yen, where, 48 hours ago, the opposite was true. Okay, so you need to move with the market. Now, I can't quite confirm it because technically we haven't made a higher high, but at least let me explain my thought process here. Okay, the Bank of Japan and the government of Japan have been working together to implement extraordinary policy. Extraordinary policy. I mean, pumping an unbelievable amount of money and creating reforms and doing everything possible on a huge scale to save the Japanese economy. Okay, it's massive. And to come out with a negative number on Japanese industrial production, I mean, I don't care how you try to present it, you're not going to be able to present it in a positive way, like, okay, good, 100 trillion yen and we have a negative industrial production number. I mean, it's bad. It's really bad. So they're going to need, how's it, penny wise, pound foolish, or if you're in for a penny, in for a pound, whatever the analogy is. They're trillions of yen into this, and they're getting negative numbers now. I mean, it's bad. So they're gonna have to get involved and pump some more money into the economy. Now, keep in mind, the Japanese invented quantitative easing. Okay? Ben Bernanke stole it from the Japanese. So they're going to need to do something here pretty serious. So tomorrow is the last day of the Japanese fiscal year. Probably another reason why the yen is weakening right now. Right? The mass migration or repatriation of money back to Japanese companies to beat the year end. I mean, Friday was, the last Friday of the year. So that's another reason the yen could be weakening here. But on top of that, bad industrial production. So the government and the Bank of Japan are going to need to do things like pump money, either print money and pump it into the economy, or just spend money, whatever. So either stimulus package or buying their own bonds or both, and those things tend to weaken the Japanese yen. Okay, so we got like a perfect storm here. In October, November, we talked about the Japanese yen getting strong up until April 1st. Well, April 1st is Wednesday. So if it starts to do this, at least I could say, well, I told you so in November. So it's not like that unexpected, right? But you need to start tiptoeing into that trade. And maybe Japan tiptoes into that trade too. But here's what I would like. I'd like to start buying. And don't be foolish about it. It's not going to just take off like this. There's going to be lots of fights. Hey, man, this could go down to 115 before it goes up. I don't know. But over time, let's say by December 31st, we're going to be at 133.33. Oops, I guess I should write it so you can see it, right? Let's change the colors. 133.33. Now, by the way, who would like that? To see this go from 118 to 133.33? Is that a bold statement or a mild statement? Okay, now Izzy asks a great question. Why 133.33? I have no idea. Totally making it up. But my strategy is clear, right? See, I have no way of controlling where it goes or even when it goes there. I'm sorry, I'm just not that big of a player. I'm not bigger than the Bank of Japan. I'm not bigger than the Fed. So what the Fed does is going to impact, right, this guess. What the Bank of Japan does is going to impact this guess. But my strategy is clear on direction, right? Will you laugh at me if it only goes to 128.88 and we only make 1,000 pips? A loser. Only made 1,000 pips on that trade. But I'm talking about these moves, guys, 3 and 4 and 5 months in advance. Right? There are people in the room with us today that can verify that I talked about this move last July. That we would go from 105 up into the 115, 120-ish area. I don't know where, but we knew that, and I guessed on the timing of everything. But when the yen was strong, all we did for 3 or 4 months in a row was buy the dips and break even, buy the dips and break even, buy the dips and break even on these yen pairs, but stayed true to the strategy based on fundamental analysis. And in July, in the first couple of weeks of August, still buying that dip at 105 and 104 and 103, 102, 101.50, talking over and over and over again that by the end of the year we'll be around 120. And right? And of course it went to 125. Oops, sorry, it only went, 1,500 pips. But we talked about it for weeks and weeks and weeks and weeks and weeks. In fact, months and months and months, quarters. And then what? What was the general idea once we get into Q1? Yen strength. we talked about that in July, that this would go up to 120 and then probably come down, peter out around 110. Well, I didn't get the magnitude right. It went to 115 and right, or I mean 125, and I'm talking 120. It went to 125, and now here we are. Instead of bouncing around 110, we're bouncing around 115 to 120. So it's just there. I can't control the numbers, but I can control the logic. And then we talked about Japanese yen repatriation, normal fiscal year-end stuff, and it's not going to be as big as the previous year because they're not doing it to avoid tax hikes, and very simple, logical business sense. And so now, I don't know when would like to turn up, and just because it's doing it now doesn't mean Wayne said to go crazy and buying USD yen. But I am explaining that the forces that made me predict that the yen would be relatively strong have ended, and now if the Bank of Japan and the Federal Reserve act the way that I think they should, or probably will, then at some point we'll look at this and say, wow, 133.33. That didn't Wayne say that in March? The thing is, when does it start? In July, right? Right? Does this? What I can't tell you is this the ultimate bottom, or does it go to 120 and we work our way to 115, and then we kind of work our way around? See, I don't know, but I'll tell you what, I'm going to participate in this upward move. Right? Based on logic. That's that. Okay? Just simply based on logic. Now, to have logic, you need to have facts and data, right? Well, I've done my homework. So I think this is interesting. To get a negative number should be good for me in this, because a negative number used to create Japanese yen strength, but now I believe will create Japanese yen weakness, because it will force either the Bank of Japan or the government of Japan, or both, to implement new stimulus or monetary expansion policies, which would then weaken the yen. Okay, so remember how it used to be like past performance does not predict future results? It's because of situations like this, right? That 2 weeks ago in this situation you'd be buying yen. Yeah, well, that was right 2 weeks ago. It's wrong this week. So let me give you another example. The US dollar is very, 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 very strong relative to other economies, okay, or currencies, right? The major reason for this dollar strength is because the US economy is strong relative to the other economies. Okay, you get it? The dollar is strong because the US economy is good. It's relatively strong because the economy is relatively good, right? Simple, right? What happened when capitalism almost failed and the US economy was crashing? The stock market was falling 1,000 points in a day. Banks were failing. Right? Financial institutions that have been around for 100 years are suddenly worthless. Was the dollar strong then or weak? It was unbelievably strong. It was unbelievably strong. It was unbelievably strong. So let's put this together, right? Past performance does not predict future results. All right. So in the crash for like 2 or 3 years, right? The dollar was unbelievably strong because when the U.S. economy was weak, but now it's strong because the U.S. economy is strong. How do you make sense of that? Right? You read a book and you're like, hey, it said the dollar's strong when the economy crashes. Well, the dollar's strong because the economy is not crashing. So there's a little more going on, right? You can't employ, you know, last month's strategy next month and expect similar results or same results. Over time, these things change. And it's this type of thing where, okay, bad news used to create strong Japanese yen. Bad news is now going to create weak Japanese yen. You need to be on the clue train or lose money. One of the two, right? So let's go back to the yen scan. Have you guys been practicing your correlation and relative strength exercises? Cool. Awesome. That's what I like to hear. So sort of kind of like sideways-ish, down-ish, kind of like that, and sideways, right? So what do we learn here? Thank you. Aussie's weakest, followed by CAD. It's a commodity currency sell-off move. Okay. First of all, if we sell commodities, what are we going to buy? Okay. So let's move this to a 15-minute chart. Which one's stronger? Which currency are we going to buy if we're going to sell commodities? Which one's stronger? Because we know like Aussie yen's falling. All that tells us is, well, Aussie's weak and yen is stronger than Aussie. So now we're looking at yen. Which one's stronger, dollar or yen? Is everybody following me? We already know we want to sell commodity currencies. Done. Next. So we know what we're going to sell. Any commodity currency is probably fine. So now if we know what we're going to sell, we have to figure out what we're going to buy. Well, we know the yen is stronger than the Aussie because we looked at Aussie yen straight down, right? It's like dropping a lead weight. You're like, all right, it's heavier than air apparently. Dollar is way stronger than the Japanese yen. So if you do your quick analysis, should take you, especially if you have multiple screens, should take you less than 1 second to make this decision. And you should just be dumping the Aussie dollar and buying the USD. Okay. Look at all these. Beautiful, huh? Get my drawing tool out. Change the color. So 15-minute chart, right? This is something that you could trade. Sell, sell, sell. You stink. Okay, that's if you use oscillators. Now, oscillators are not the most ideal thing to be using in a trending market. And the reason for that is because they tell you overbought and oversold conditions, right? For price. Okay, well, let's think about it. The market's trending down, so clearly it's going to be oversold because everybody's selling it. Okay, oscillators are meant for range-bound markets so that they can confirm support and resistance. Well, I mean, there is no support here. It's only resistance, right? So, you got to be careful. They're not always accurate. But what else do we use? Price action, right? But before we get to price action, this right here on this 15-minute chart only, on this time frame only, this is where the market on this time frame became bearish. So what you do is you sell at the 21 EMA. You sell 21 EMA. You sell at the 21 EMA. You sell at the 21 EMA. You sell at the 21 EMA. That's it. Changing color again. You can use price action. All right, here was the previous low, so you sell there. Here was the previous low, so you sell there. Right? Here's the previous low, oops, so you sell there. Here's the previous low, so you sell there. Right? Here's the previous low, oops, sell there. And then here's the previous low, didn't make it that far back, here's the, because it's actually speeding up. So even price action, it's moving so fast to the downside that even price action is too slow, which is just amazing, right? So somewhere on this rainbow, you should be, I mean, I don't know, you should be on the clue train, right? Somewhere on here, I'm sure you could have sold high. Okay. You know what? I think we've put in a pretty close to an hour here, so let's wrap up, and we'll continue tomorrow. And I'm going to upload this to YouTube. So if you watch on YouTube, please leave a comment. Say, "Hey, thanks, Wayne," or ask a question, and I'll do my best to answer. At the very least, give it a thumbs up. Right? I give you about 2 hours of my day for free. Maybe you could spend 1 second at least clicking the thumbs up. Let me know you care. Huh? So we'll do this again tomorrow, 7:30 a.m. New York time, tradersway.com. Peace on earth. May the pips be with you. May your profits be above average.